Bitcoin has been breaking all-time highs, and it's all getting very exciting again. But how do we know if this rally is going to last or whether it's going to come crashing back down again? To answer this, we need to look at possibly the most important cohort, short-term holders. These are the price-sensitive recent buyers who often drive the majority of Bitcoin's near-term price action. To help decode what's really going on under the surface, I'll walk through 5 of my favorite short-term holder metrics and charts. So, let's dive right in. First up, let's look at where the short-term holder cost basis is right now. It's currently sitting around $93,000. Typically, this cost basis is calculated by taking the average acquisition price of coins moved or spent by addresses that last moved their coins within the past 155 days. This 155-day threshold is the industry-agreed cutoff, where a short-term holder turns into a long-term holder and is therefore less likely to spend their coins. I've refined this metric slightly by applying a linearly decreasing weight to prioritize more recent spending activity, making the cost basis more responsive and accurate for short-term active UTXOs. When we add some colored backgrounds to the chart, we can see that the cost basis acts as perfect support during bull markets and decent resistance during bear markets. It's well regarded that if you want to add to your position during a bull market, waiting for the price to touch or dip below the short-term holder cost basis is often a great time to accumulate more sats. This bull cycle has shown several good opportunities to accumulate Bitcoin at discounted prices, highlighted by green backgrounds where short-term holders feel the most pain. These are often points where price reversals occur, assuming you still believe we're in a bull market. For traders, there's also a spikes background color, indicating when the price is relatively overextended from the short-term holder cost basis, which could be a good risk-reward moment to take some profits before re-entering. Next, let's check some valuation metrics for short-term holders. The famous MVRV ratio, or market value to realized value, compares the current market value of coins held by short-term holders to their average cost basis. It essentially measures the profit or loss of recently active investors. Recently, we saw one of the sharpest improvements in short-term holder profitability on record, rising from 0.81 to 1.2, meaning short-term holders went from a 19% unrealized loss to a 20% unrealized gain very quickly. Despite this sharp turnaround, we're not at euphoric levels yet. Historically, at 1.4 on the ratio, which is a 40% unrealized gain, it has been the point where short-term holders start looking to sell. During this cycle, we haven't broken through that line, so it's a key level to watch. When it has been breached in past cycles, prices often went vertical as more retail investors piled in. Looking at short-term holder momentum, the valuation momentum hasn't exploded like you might expect during a strong rally. We've only just crossed from negative into positive territory, which shows some early strength. But we're still a long way from overstretched or overheated levels. Historically, this metric tends to top out around 0.35, which has often marked a key reversal point where short-term holders get a little exhausted. If the rally keeps pushing higher, that level will be one I watch closely, as it could signal when short-term holders may start locking in profits, increasing the risk of a pullback. Similarly, the short-term holder net unrealized profit and loss metric presents the same underlying valuation dynamics, but in a more visual, sentiment-driven format. It shows we've moved up from the hope threshold into the optimism zone, signaling improving confidence among recent buyers. However, we've yet to re-enter the belief stage, and we've not seen the euphoric greed phase at all yet, which typically coincides with the highest risk and most overheated conditions. This helps paint a clear picture of where newer investors currently stand, still relatively early in the sentiment cycle, with room to grow before hitting extremes. To understand where we might go from here, I use my custom short-term holder, Sigma Cloud, which plots the realized price with standard deviation bands indicating expected price ranges. The two key levels to watch are the red and purple bands, representing 2.5 and 3.5 standard deviations, respectively. In every rally this cycle and previous ones, when price hits these bands, it often means the market is statistically overdone and a short-term correction follows. These probabilistic measures are valuable because human psychology is consistent, and short-term holders are the most predictable bunch of them all. Currently, the red threshold is around $112,000 and the purple near $120,000, levels that move dynamically with price. We're nearly breaching the red level now, so if we push further into new price discovery, these bands will be crucial to watch to judge if the rally continues or if a short-term pullback is imminent. Personally, I'm not interested in trading Bitcoin on a daily basis. I'm more focused on the bigger picture rather than chasing every short-term move. However, I will be closely monitoring these key levels because they provide valuable signals about when it might no longer be a smart time to keep accumulating Bitcoin. When prices approach or enter these upper threshold zones, the risk of a short-term correction or pullback increases significantly. So, even if I'm holding for the long haul, I want to avoid buying aggressively at potentially overextended prices where short-term holders might start taking profits. Right now, we're clearly entering that caution zone, which means it's time to be more selective and patient rather than doubling down blindly. These short-term holder clouds are a powerful tool in bull markets. They give us a window into the mindset of recent buyers, arguably the most reactive group in crypto. They're not perfect, but they're one of the best tools we have to anticipate moments when the market is becoming statistically overheated. That's why I'll be keeping a close eye on it as we move forward. So, to wrap things up, short-term holders are absolutely critical to watch in this market. They're the ones driving most of the near-term volatility, and by looking at where their cost basis sits, along with how profitable or underwater they are, we get a much clearer picture of what's really going on under the surface. It's not just about watching the price, it's about understanding the mindset of the most reactive participants. Right now, the data's showing that while we've had a solid move upward, we're not in full-blown euphoria. Momentum is positive and sentiment is improving, but we're still in that middle zone. Optimism, not belief. That tells me there's still room to run, but it also means we're not early anymore. The easy part of the rally is likely behind us. And finally, with price starting to push up against those upper sigma cloud bands, we're entering a much more cautious area. That doesn't mean a crash is guaranteed, but it does mean risk is elevated. I'm not looking to day trade these swings, but I am being selective with any new accumulation here. In a bull market, that's what separates emotional FOMO from strategic positioning, knowing when the risk reward starts to flip. Because mastering that balance is what turns short-term holder noise into long-term holder gains. If you're serious about Bitcoin analysis, my full custom indicator suite is now live, built for investors looking to gain an edge through deep cycle signals and advanced on-chain insights. It's available now through the link in the description, where you'll also find my free newsletter. And if you found this valuable, hit the like button, subscribe to the channel, and turn on notifications so you never miss an update. And I'll see you all in the next one.